Howdy ho, everyone, and welcome aboard. It is Monday. Another weekend gone. Gee, they don't last long enough, do they? It's pretty much that simple. Had a great weekend. It was footy finals here in Australia, and a couple of decent old games. One of which on Saturday was very, very decisive. The other, not so much. Anyway, we won't talk about that. It's done and dusted for another year here in Australia in terms of the major football codes. Let's not talk football. Let's talk trading, shall we? I think this is going to be an interesting week, and I hesitated whether I'd be using the word interesting or difficult there, to be honest. And the reason I say that is because we've got a whole bunch of stuff going on, not least of which, of course, is we are counting down to the US elections. But there's more to it than that. And let's have a very, very quick look at the Forex factory and see if we can work something out here in terms of what is ahead and what we need to avoid more than anything else, I suppose. We need to avoid this crap. I've got to tell you that. Not so much the bank holiday in New Zealand, and I don't know what that's about, but good luck to New Zealand. But what we do have is European summer is done and dusted, and therefore we have a daylight saving time shift. And as those of you who follow the UK session will have noted, there's a little bit of a time shift going on there as well. So that may be good for some people who are travelling home from work when we normally do the UK session, which is 5 to 3 Singapore time. That now shifts to 5 to 4 Singapore time to accommodate for the UK Open. So that is worthy of note, I suspect. That happened yesterday, of course, in Europe. Today, well, really bugger all, one would have to say. New home sales, okay. I guess that's important to US citizens, and at times it is important to the world as well. But I don't think it's going to rattle or move the market. Don't think it's going to cause too much damage anyway. Tomorrow, similar story. We do have a few medium impact releases out. Durable goods, in fact, and consumer confidence in the US of A. I think I'll pass on those as well. It starts to kick into gear on Wednesday when we do have CPI figures coming out on the Aussie, and they're forecast to be a little bit better than previous. Interesting. The market will watch that, one would think, and the Aussie may well move on the back of a good or bad number. We'll see. Then, of course, we get right into the thick of things with the BOC rate statement and, of course, monetary policy report. Nobody expecting the rate to change. Same on Thursday, with the Bank of Japan doing exactly the same thing. And also on Thursday, which is a bit of a super Thursday, we've got advanced GDP figures coming out of the States, but probably the main event this week is the ECB press conference. And that will take place on Thursday, 1:30 p.m. That is London time, which of course is not far from where we are currently, 1 hour in fact. So we'll be actually in the market, or we'll be on air when that announcement is made and the press conference begins. So that could be interesting. We can watch a bit of a ride there perhaps. Who knows what? No, I won't even pontificate or speculate as to what may come out of there, but we shall see, and we'll just see what the market and how the market reacts. And then, of course, on Friday, the CAD, a bit of a big week for the CAD, because we do have the rate statement and GDP figures for the month of September coming out. Righto, so that's pretty much the news, but there's a whole lot more going on, I think, this week. Look, I have nothing to do with it, frankly, but we're talking reporting season in the US of A, and this should affect the indices in some fashion, because we do have, I think it's Apple, Amazon, and Facebook. I was reading that somewhere. They're either reporting this week or next week. I would imagine it's this week, but I could be wrong. And that could very well shake up things in instruments like the NASDAQ, but certainly in the US in stock market. I think you'll see a little bit of movement based on those numbers when they come out. I don't think they all come out together, but it could be an interesting ride on the S&P 500, for instance, but certainly on the NASDAQ. Righto, so what's coming up today from me? Ash may be joining us a little bit later. He's had to keep an appointment in the city, so he's en route. I don't know if he'll make it back or not. The one chart I'm looking at right here, right now, is Euro Yen. The reason I'm looking at Euro Yen is because I see, or I did see, I don't know if I still see, a double head and shoulders. I'll put it that way. It's probably the best way to describe it. Let me show you what I mean by that. I'll just check the chat as well. Check the chat as well, because I do see there's an entry there. From John. G'day, John. How you doing, mate? Good to have you in the show, of course. What I'm seeing here is left shoulder, head, right shoulder, and that's a prime one, right? That's absolutely prime. And we've been talking about this, I think, for a couple of weeks now, where we've had a break of the neckline, which is pretty clear. And we had a little poke above it, and then we fell, had another little poke above it, and we've begun to fall. How far are we falling is the question. Look, I love these double pumps as retests of head and shoulders, and this is a very clear head and shoulders in a perfect position after a big rally, and I only see downside here. I may be blinding myself, but that is my absolute bias, and now I'm starting to see left shoulder, head, right shoulder. It's a bit of a complex right shoulder, however, but I'm still keen. I'm really still keen to get short here. So how do we get there is the big question. And as always, we will take a good look and see if there's a possibility. I nearly said possibility, but I just pulled it back. Daily chart is not that clear in terms of an entry, but it is fairly clear in terms of it has tested the top of this descending trend line, which has now created, in my mind, a channel, or sorry, not a channel, a rectangle that we can follow. 2 equal highs here, 2 equal lows here. That's good enough for me. The last time we visited an extreme was to the high side. So in that regard, I'll be looking for a lower high. There would be no better place to find that lower high than in this vicinity here, where we've got the monthly pivot and that descending trend / trade line in place. So that's top of my watch list at the moment. If we can get to here and then maybe give us a false break of really that trend line doesn't exist anymore. So I'll probably have to move it. Well, I don't probably have to move it. I do have to move it. And the reason is it's been broken twice. And once it's broken twice, I don't really want to know about it because it becomes unreliable. But the same thing applies here. If we get up to here, don't take out the high, but get to this level. Let me use my pen, probably a little bit easier. If we were to find our way up to here, put in a lower high based on these two, if you like, or it could even touch that if it wants. I'm easy, but a lower high is really the best case scenario. Then finds its way underneath here. Probably take out all the pivots, they're all together, then come back and retest the confluence of monthly pivot and descending or resistance trade line. And I think that would be risk to go short there. Depends on the candle that you get. If it was something like that candle, then I'd be happy to trade it from there without the ABC scenario. It would be the same thing basically, but I'd be happy to trade that candle if that were the case. Something like that with a white body, entry there, and you'd be taking profit here, but you'd be letting the rest run down and see if we can complete this cycle, which of course is looking at that big head and shoulders. So let's go back and look at targets here if you're interested in following that. If you were, you would be thinking, hang on, let me get rid of that pen. You would be thinking, draw a line down the center, say about there somewhere. There's your shoulder. Let's say that's the shoulder. We come off it. We come down to this level here. Down here, retrace somewhat. Then we look for the next level down, which is probably the end of the cycle in my book. So it might be there somewhere. And therefore that completes. So down here, retrace, down here, end of story. So ultimately you're looking at around about the 116 mark, I would have thought. And we are currently at what, 124. So there's a nice 800 pips there available if we can find our way in. I would be interested in that candle right there, to be frank. Why am I not in that move is the question I ask myself, or if the move comes, why am I taking that position? I don't think it's that dusty, you know. 180 pips risk, potential 750, say reward. What's wrong with that? Is there anything wrong with that? Where do we have to take profit? About halfway to along our risk. I think it's worth a crack, guys. I'm going to take it. This isn't the one that I was looking to trade on the weekly chart, but it doesn't look too dusty. So let's just take it easy. We don't need to put anything too risky on board here. It is weekly chart. So we don't want to tie up too much of our capital on a weekly chart, but we can easily risk 0.25% here. Selling at, let's have a look at the level. Well, you can't do this multiple things. 123, is that right? Let me get that. Sometimes that tells lies, that horizontal level. No, it's about right. So we'll go with, we will go with 123.35 as our entry level. 23.35. Our stop loss. Let's get a little bit tidy. Stop loss will be, I think we'll be wise to go above that bar, 125.11. Will be our stop loss, 125.11. And TP1. TP1 probably needs to be there, I believe, 122.65. So TP1, 122.65. And that'll do us for now. As I was saying, TP2 probably needs to be in this vicinity. We'll see how we go with TP1 and adjust that in need. I'll be looking to actually get scale into this. If we get through that level, that TP1 level, then come back and retest it. Yeah, happy days. I'll be looking to scale into that as well. So I'll be probably looking to take 2 or 3 positions on this if it does get a move on. but it is euro yen on the weekly chart, selling at 123.35, stop loss at 125.11, and TP1 at 122.65. I just better put that in the market on this account as well. And like I said, you only need about 0.25% for this to get into it, and then we'll look to build it as we go. 123.35. Stop loss 125.11. Okay, there we go. Trade number one for the week. G'day, SF. How are we all doing? Sorry, guys, just had to have a sip of my Coke. Righto, that was the number one, well, actually it was number one watch list Sunday. I was unable to join the Sunday preview show because I was watching the footy, I'll be honest, and having a few beers, watching the footy. Is there anything more Australian than that? I don't think so. From Eric. G'day, Eric. How you doing? Is SPX 500 all right to buy today, last Monday of the month? I think you mean the S&P third Monday of the month. And this is not that. I think that was last week and it was a loser. So if that's what you're talking about, Eric, then my answer would be no, that's not the system. I don't trade that system, but and I don't know why I don't trade that system, to be honest, because it's got such a good win-loss ratio. But that would have been last Monday. If you're asking from a simple yes, no, is it okay to trade it because it's the last week of the month per se? Well, it's actually not. There are a couple of days next week to be trading. I don't trade indices at all. So I'm probably the wrong person to ask. If Ash joins us a little before you leave the show, then I'll ask him. But as far as I'm concerned, I think you're probably asking the question, is this the right day to trade the S&P 500 buy regardless of what trade? And the answer is no, it's not. Hope that one helps. Right, so that was one of four that I was looking at, and as I was saying, I couldn't join the show yesterday because of the footy. Selfish, I know, but you know, it only happens once a year, and I haven't missed one in 50 years. Yep, that's true. 50 years I haven't missed a rugby league grand final. So the other three were Euro CAD, Aussie dollar, and Kiwi yen. Let's start with Euro CAD. Now I was having a yak to Ash in the UK session, and Ash was of the opinion that oil is in deep SH1T, and on the back of that, the CAD would struggle. Now I can't argue along the oil lines at all, and I absolutely take on board what Ash is saying very, very seriously, but I still can't get over. If you ask me, I still can't get over the chart pattern that I'm seeing. And the chart pattern that I'm seeing on EuroCAD is a very, very, very clear. Don't like it above 159.43. And that is, you know, that's been going on for quite some time. So I can't seriously think that this is a... yes, John, absolutely. It was a good weekend, actually, because we had two grand finals. The AFL and the NRL. So yeah, it was a big weekend. I actually did some work in the meantime during the day. These are both night games. So I still see this big double top sitting here, and I still see on the smaller time frames, when I say smaller, this is a weekly chart, this big lower high that we actually traded a couple of weeks ago, but we only got a TP1, which is down here, of course. And the price then came back and took our our stops, which were at entry, as I recall. So we made money, but this is the 8th or 9th time that I've attempted to play this double top, and still it refuses to budge. I'm there again, from a technical point of view, but I totally take on board what Ash was saying. And when I look at that, and I think, well, okay, we've got a clear range now after the double top. We haven't been able to break out of that. And really, I'm seeing the potential for this to go to the top of that range. So my short-term bias has potentially shifted from bearish to bullish. Then I have a look at this chart, which is the 4-hour chart, and I see a high test bar, a false break of the monthly pivot, which gave us a nice little another shot over the bow here, saying that, okay, if price comes back here, it's probably going to break. And then we had this bar here, which is a high test bar, again, rejecting that level at the monthly pivot, but not taking out the high. This is presenting me with a bit of a quandary, because I do like that as a genuine slingshot, which is my trading strategy, right? I like the setup on the 4-hour chart. The daily chart is also giving me high test bar, lovely little candle pattern there that I like, but not yet the third. Well, it's the third test is there, but not with any gap. I'd like to see price pull back away from that, as it did on the 4-hour chart. My question to myself is, am I really willing to trade this as a monthly pivot break? Well, really, the monthly pivot's been broken and rebroken and rebroken, so I shouldn't be that concerned about it, to be fair. It's just that it's at this confluence area. But I am inclined to think a break above this level takes us to the top of the range. So I'm absolutely thinking quite seriously about trading this long. I think if I put my stop loss there, 109 pips, which is probably the safest way to go, I'm only going to get about 1.5 to 1 by taking on this substantial extra risk, which of course is inherent trading at that confluence area. Yeah, it's a bit tough. Further analysis tells me a little double bottom here, higher high, higher low, higher high, higher low, higher high, question mark, equal low, equal high. That's where it becomes a little bit tricky. And again, we've got a little bit of a range forming in there intraday. Inside the range, that is, of course, the one that we're looking at. So you can probably see that there. A couple of highs here that are equal, and a couple of lows down this other side, which are equal as well. So that's the kind of thing that I'm looking at. And frankly, I don't like to trade long at the top of a range, which is currently where we are. So I'm trying to talk myself into which is the best way to go here. I'm trying to coach myself as to which is the best way to go. And really the best way to go for me is to let this pull back. I don't know where I'm going to find an entry after that, frankly, but I'm going to have to let this go. As much as I like the scenario, I also see what is potentially happening here. It is Monday as well, typically a slow day. We do have CAD news coming out during the week, so maybe the market's just going to ease off the pedal there until that happens. So I'm just going to leave this. But I am conscious that this could break out. And I think if it did and then came back and retested here, then I'd jump on board. But I don't want to jump on board right now. So EuroCAD was another of them. That was the second one on my watch list. Aussie US dollar was the third, but Kiwi yen was the fourth. I'm going to go to Aussie US dollar in a tick, and I want to point out why. I'm going there in just a tick. But this one, Kiwi yen, is quite interesting. I had good reason to think that this is again, that weekly scenario that we were talking about before, the one that we've now traded, euro yen. The same is evident from a weekly chart point of view on Kiwi yen. Now, Kiwi yen is showing me a clear false break of this trade line. And I could very easily put an entry below this candle. Question is, where do I now put my stop loss, given that we've got higher highs here, higher highs than the candle? And maybe that's the answer. Put your stop loss there. But let's take a look at the risk to reward available on that one. And we've got, 170 odd pips. And our nearest is, again, just about half of that risk, which I'm not averse to. I think that's quite acceptable to take half of the risk as your first take profit level. Yeah, I don't know. I'm kind of seeing this as a break and retest as well at a strong level. So it's a little bit on the toss of a coin side. Which way is this going to break? And I think I've talked myself out of that weekly position because I don't see this clearly now as a trade short. I'm not sure what I need to see, frankly, because it is clear. I mean, the false break is clear. I don't like this scenario, though. We've gone into a range having taken out the high of what would have been the master candle. So I'm just going to leave it alone, guys. And that was the fourth on my list. The one that I was most keen on likely was Aussie dollar. And the again, big question mark on this is US elections coming up in 9 days' time. And how is that going to affect this pair? Well, I'll show you quite clearly, in my humble opinion, why I'm bullish. We broke this level back in 2003-4, came back and tested it again, false break of it in 2008, global financial crisis time. And then we rallied up to here, came back in 2015, couldn't break through it, finally did in 2019, which has now looking very much like a false break of that area. You got to ask the question, what's fair value of the Australian dollar versus the US dollar? Well, it's a great question. And I think that dotted line there is probably around about the mean area of the chart in the last, 15 years, let's say. I find that hard to argue against. And for that reason, I think fair value gets the Aussie back up to this area. And we've had a break and retest of that level that has been so strong over that period, as I said. Again, on the bigger time frame, on the monthly chart, that looks like a potential ABC. If you want to tie your funds up for the next couple of months, maybe 6 months, maybe 12 months, then 440 pips is only going to get you 707. Doesn't make any sense to me from that point of view. So we've got to find something a little bit tastier in terms of reward to risk. And at this point in time, I can't see that because we're at the top of a channel coming off it. Or are we at the bottom of the channel coming off it? We're in no man's land is the answer that I get, right? So I'd like to see this break support, either this level or this level, preferably this level, then come back above it and retest it, and then I can look to trade it long. But I'm super keen to get long the Aussie. You can see that triple rejection of the 70-30 level. I think it is 70-20, something like that. So I see this playing out at least to that level there, again, in the interest of symmetry. And I know that maybe not the formula for a lot of you, but this looks like a big W pattern to me. And that's where that takes us, 73.35-ish, something like that. So if we can get in around about the 71 mark, there's 200 and odd pips available to us there, if that actually does pan out. So that's the one I'm keen on, probably more than anything this week. Just got to see this break of support turn into a false break of support, and then we can look to go long. Righto, guys, that is the preview from me. For the US session coming up, I've got lots of things to look at, including the 7 major pairs. And the reason I want to look at the 7 major pairs has a lot to do with the US elections, which are upcoming, and why really I'll be looking to avoid them. But there are some interesting patterns I want to show you in the next hour or so, guys. And I was going to do this in the UK session, have a look at dollar yen. And that is very, very, very interesting, that charts, when you compare it to what is actually going on at the moment. I'm going to go back to 2000 and track you through each election since 2000 and see exactly what we can find out there. Very interesting. I'm sure you'll find it. Right, guys, those of you who are not subscribers into the US session, it's time to bid you adieu, and thank you for your company. Ash and I will be back tomorrow at 5 minutes to 4 Singapore, not 5 minutes to 3, because the UK session, due to daylight saving, now begins at 4 o'clock Singapore and Hong Kong time. Hopefully we can see you then. Everyone else, stand by. I'll be back in just a tick.